Welcome back to the channel. ARK Invest. They invest in disruptive innovation. What are the industries that are going to do extremely well over the next 10 years, and what are their forecasts? That's what we're going to look at today. We're going to see what ARK Invest thinks and where they're going to be putting billions and billions of dollars. This is going to be an interesting one. Stick around. Okay, so the first thing to note is that the ARK Invest Big Ideas 2020 report is actually quite a long report. It's 132 pages in length. You can see it on the screen here. And basically, they start off by giving you some information on the risks of investing in innovation, and then they go on to cover a number of different areas that they believe will cause disruptive innovation in the market and see large market capitalization increases in the next 8 to 10 years. So very interesting to look at. There's a lot of great detail, a lot of great charts, a lot of great visuals, and a ton of information. So I highly recommend reading this. I've already read through most of it, and I still am going to spend more time rereading certain areas and looking more closely at the charts. So definitely check it out. Link is in the description on where you can go to the ARK Invest website to put in your information and download the full PDF. All right, so let's go over to this article here. In this article, what we are going to do is review more specific information. So this was posted onto ZDNet just yesterday by Vala Afshar. So thank you to Vala for putting this together. We're going to dissect this article and we're going to look at areas that we feel are most important to individual investors focused on technology and disruptive innovation. So we're going to focus on a smaller percentage of the total. They have 14 technologies that they say are approaching tipping points, and we're going to look at a few of these. All right, so the entire list is here on your screen. You can pause it real quick and read all of it, but I'm going to go ahead and move on. So it says here that ARK Research forecasts that disruptive innovation technologies are going to grow from a 14 trillion market in 2020 to a 210 trillion market by 2030. That's insane growth for 8 years. So keep that in mind. This is very, very steep growth that they're projecting in the next 8 years. They think that AI innovation could increase nearly tenfold to more than 100 trillion in equity market capitalization by 2030. Battery technology could enable autonomous mobility, generating more than 30 trillion in market capitalization by 2030. Robotics advances could generate more than 10 trillion in capitalizations by 2030. Genomics technologies could drive more than 3 trillion in equity market capitalizations by 2030. And crypto assets, 40 trillion, and digital wallets, 9 trillion, may command nearly 50 trillion in equity market capitalization by 2030. Now, keep in mind, this is going from 1.4 trillion to 49 trillion. I mean, you're talking somewhere around a 25x there, which would put Bitcoin somewhere in the neighborhood of 900,000 to $1 million a coin, roughly, right? Check the math, but I believe that's accurate. Okay, so the first thing that we're going to talk about is artificial intelligence. That's one of the main points that they go over on their list, and we're going to stick to the very specifics of why they think this is going to be going where it could be going, and then where they think it's going. So that's kind of the plan. So they say that the cost to train a neural network equivalent in size to the human brain in 2021 would have been 2.5 billion. And this is likely to drop 60% at an annual rate to 600,000 by 2030. Artificial intelligence costs are declining, and they are going twice the rate of Moore's law, according to what they say here, as performance is increasing significantly. Now, this is pretty interesting because AI in reality can do a lot of things, right? It can help power some networks that we may not even be thinking about today. So just the increase of market capitalization by artificial intelligence to this degree is also going to bring about many new industries. So I think that's it's a very interesting concept to think about. And we know that just very recently, Meta has announced, Meta being Facebook, Zuckerberg, they've announced that they believe they've created the world's fastest supercomputer. And this is basically AI supercomputer that's basically going to be doing the computing of the metaverse. So very, very interesting things are happening, and they're happening very rapidly. So I could see this definitely being a possibility just with the amount of increased use of AI that I see in my work in technology. So I think it is increasing very rapidly. This also suggests it may be a great area for employment. If market capitalization of AI is going to increase by this much over the next 8 years, there are going to be a lot more jobs for people skilled in AI, data science, machine learning. So these are very interesting areas that one may even be able to study in and build a career in. So keep these things in mind. Let's go ahead and move on. So output of AI assisted knowledge workers 2021 to 2033. So you can see that productivity multiplies over different industries as AI is implemented. That's kind of what this chart is showing you. And they say that it's going to increase the output of knowledge workers by 140% by 2030. Very interesting. Let's keep moving. Spending on global AI software and hardware could reach over 20 trillion by 2030. AI companies could scale from almost 2.5 trillion to 87 trillion in enterprise value by 2030. By 2030, AI software companies could produce 14 trillion in annual revenue collectively. The resulting 4 trillion in free cash flow could create over 80 trillion in enterprise value, up from 2.3 trillion in 2021, generating returns of 48% at a compound annual rate during the next 9 years. Now, what is this really telling you? Let's put this down into layman's terms for everybody. What they are saying is that AI software would be used much more throughout many big industries. Now, if that was to occur, the spend on AI is going to increase rapidly, and that's what they're talking about here. They're saying that that will make the enterprise value of it, the value to consumers, much, much higher, meaning that it would likely drive AI stocks much, much higher and companies specializing in AI much, much higher. So that's kind of what this is telling us here. It's telling us that there could be a potentially large market opportunity in AI software and hardware companies. Okay, next we are going to look at digital consumers. So they say here, as digital takes share in our daily lives, we believe the market as measured by online entertainment spend, advertising spend, and platform e-commerce fees is likely to grow at an 18% compound annual rate during the next 5 years, from 1.8 trillion today to 4.1 trillion in 2026. Now you have to keep in mind, if you see the potential of this kind of growth, well, at 18% compound annual rate, what you're doing is you're kind of beating everything else. Now, this is kind of interesting because this is one of the lower figures, right? The higher figures really come in when we start looking at blockchain and Bitcoin and things like that. So it's quite interesting that you see that there could be this much growth in just, companies that focus on online advertising, that receive a lot of e-commerce fees online, and even online entertainment could grow tremendously in the next 5 to 6 years. So they're estimating that on average in 2021, internet users spend 38% of their free time online and 62% offline. By 2030, they expect to see these averages flip, with users spending 52% of their free time online and 48% offline. Now, this is kind of interesting because I think they're right. This is kind of where I see it going too. A lot of people are going to be spending more time online because spending time online these days, you have the safety factor physically with everything going on in the world. On top of that, bandwidth costs are reducing throughout the world and bandwidth speeds are increasing, making, high resolution digital meetings something real today. You go back to the 80s and video conferencing and stuff was still conceptual. They were still putting it in TV shows and stuff as something we may see in the future. Well, we're there. We have it now, and it's grown to a point now where it's ready to go to the next level. The amount of bandwidth we have can now support, meeting in real time, possibly in a metaverse, right? These things are real possibilities. And once you have these more immersive experiences, assuming that users will spend more time online rather than offline is a very accurate assessment. You have to imagine when we get to the point that you have, Magic Leap's augmented reality technology and you have other types of augmented reality coming in, well, then you could just be wearing contacts or glasses that are connected to the internet and that are showing you an augmented reality, meaning you could be online all the time. You then add things like that with the metaverse, and we're talking decades out for technology like this to really be, for the mass consumer and affordable. Maybe less than decades, I don't know, but the fact is, as this happens, seeing these numbers flip is very, very possible. It is something that I don't think would surprise anyone. So it's very interesting to think that if that's where we see the world headed, well, what are the industries that are going to appreciate the most because of it? And would those not be good investments over the next decade? Now, keep in mind, the disruptive innovation comes with risks because there's regulatory concerns, there's concerns with just markets changing and new technologies being discovered that, innovate further than even these technologies. So it's very, very interesting, and there is a lot of risk, but just keep those things in mind. Okay, next we see here, it says ARK forecasts the global digital advertising market will grow at an 11% compound annual rate over the next 8 years, surpassing $1 trillion in expenditures by the end of 2029. I think this is entirely possible as well. As you start seeing more people get connected into these different immersive experiences, and as you start seeing more people spending more time online, well, then suddenly that's how you reach consumers the fastest. It already almost is today. How many times do you sit around and watch commercials on TV? Most people don't. Even on YouTube, you would rather skip those commercials. So what does that mean? It means that it's getting harder to get your attention, and it's getting more valuable. Now, the more time you spend online, it's going to continue getting more valuable. So companies that are focused on digital advertising, I think they're going to do very, very well. The Trade Desk is one of the ones that I'm invested in because I see this being something that is going to continually grow, because this is where human consumption is going. And if human consumption is going, those human beings are going to be the valuable products who you're going to need their time for advertising in order to sell your stuff. Now, if that's the case, seeing it grow at 11% may even be an underestimation, because I think the amount of people staying online for a longer period of time will probably grow at a faster rate than they're expecting. Newer generations are spending way more time online, and sometimes that's how they communicate. They don't see each other in person anymore with the pandemic. And I think that what's going to happen is the result of this pandemic on younger generations is that they are going to be more accustomed to connecting online and talking to people online. That's what they've been doing. They've been going to school like that at a very young age for quite a while. I think that's going to have an effect on their development and how they grow and what they want to do. And one of the things they're going to do is realize they can do a lot of things online and they don't need physical communication as much. It's going to be interesting to see how it really scales, but I think there's the potential that these numbers could be a lot higher than what ARK is suggesting. Okay, next we're looking at digital wallets. It says here, digital wallets like Venmo, Cash App, and others are penetrating traditional financial markets, including brokerages and lending, thanks to superior experiences and lower costs of acquisitions. In ARK's view, they could scale at an annual rate of 69% in the US, from more than $400 billion in market cap to $5.7 trillion, and 78% globally, from $1.1 trillion to $20 trillion during the next 5 years. They're looking at digital wallets scaling by almost 20x in 5 years. Next, they are saying digital wallets are the number one payment method offline and online. That's 100% true. I mean, everyone would much rather use a digital wallet than cash. It actually surpassed cash last year in point of sale payments. There we go. The number one digital wallet users have surpassed the number of deposit account holders at one of the largest US banks. This is pretty unbelievable. Square's Cash App and PayPal's Venmo have amassed 74 million and 82 million annual active users in the past 8 and 11 years, respectively. JP Morgan hit 60 million deposit accounts after 5 acquisitions in more than 30 years. So keep in mind, this is saying JP Morgan took 30 years to get to 60 million deposit account holders. Cash App and Venmo have surpassed that in less than 11 years. In actually 8 to 11 years. That is rapid move from traditional banking to digital banking. And well, that brings us to our next area, which we're getting very soon to. So it says the US digital wallet opportunity could scale at 69% at an annual rate of more than $400 billion in 2021 to $5.7 trillion in 2026. We just saw that. The global digital wallet opportunity could scale 78% in an annual rate from 1.1 trillion to 20 trillion. So that was a repeat of what we just said, but it's unbelievable to see these numbers, because you could literally be looking at such massive return in a period of 6 years. It's pretty crazy. So Next, Web3. So they talk a little bit about Web3. I'm not going to go into all the details, just a few points that I think were important here. By 2030, ARK expects Web3 to depress annual offline consumption by 7.3 trillion, boosting direct online expenditures at an annual rate of 28% from 1.4 trillion today to 12.5 trillion per year. What this is saying is that they are looking at Web3 to start taking offline consumption, which is things you do when you're not online, of course, and stealing market share from there and turning it into online expenditures, meaning that spending and the amount of money that's going out is going to go out likely a lot more through Web3 paths than the traditional offline paths, which is a very, very interesting thing. I mean, NFTs, part of the Web3 space, well, they talk about it here. Generated 21 billion in sales as the number of monthly unique users soared nearly eightfold to more than 700,000 in 2021. 21 billion in sales. And this is just the beginning. So what they're really telling us here is that they are seeing a shift, and that shift will very likely occur in the next few years, anywhere from 3 to 5 years, where more and more people will start finding value in owning things digitally. NFTs allow you to do that with a lot of physical things. So there's a lot of growth that can occur in NFTs that hasn't even began today. Right now it's for digital art, and that digital art is going to see more and more utility and uses over time. Then you bring in gaming into it, and suddenly when you're gaming, you could be getting items as NFTs that have an actual monetary value that you can either keep or sell, and the time you're putting into gaming then is then bringing in investment opportunities to you. It's bringing in funds, it's bringing in income. And these are things that are lacking in games today. Most games have centralized economies, right? And everything's worth really nothing unless you're the owner of the platform. But what this is doing is this is allowing actual economies to be created in digital products, in digital worlds, digital games. So it's very, very interesting what that would do to gaming. You might have some people that will just become gamers professionally because they are earning things in those games that they can then sell for money in the real world and live their lives. This could really, really change what we are expecting for the future. The future could be seeing a fundamental shift, and that fundamental shift could be that we are now adopting this, stage of digital connection where we're taking the human mind and making it part of this digital ecosystem where now, your mind can be in augmented reality, you can be in virtual reality, you can be in the metaverse. The things that you play, the things that you earn in games could then, either be sold or kept as collectibles. You could put an NFT in a frame and put it in your home in the metaverse. Like things could really go to areas that, people think are just science fiction. But the fact is, things are happening now that are making these things that may have been thought as science fiction become a reality. It's very, very odd. It's very, very odd to see it at this point and wonder, is this really going to happen? And if so, what should I be investing in? Okay, then we come down here. It says NFT demand for blockchain-based games and virtual worlds could exceed that for digital collectibles and arts, especially as collectibles and art begin to exhibit more utility in various games during the next 5 to 10 years. ARK believes NFTs will blur the lines between consumption and investment. Kind of what I just talked about, right? They are saying that the demand for blockchain-based games could exceed that for digital collectibles and art. So what that's saying is NFTs today are mainly for digital collectibles and art. But blockchain-based games and virtual worlds could make that demand soar. And suddenly you have this huge utility for NFTs, right? NFTs could represent many different things, not just a digital collectible or art. It could be just items in a game, and maybe those turn into their own collectibles. Right? We don't really know how this is going to play out. But I agree when they say that they believe NFTs will blur the lines between consumption and investment, because right now when you're gaming, for the most part, you're putting in your time and you're consuming time and you're not gaining anything in return. That might very much change. Your time could be an investment in your future by playing a game. It's very, very strange. Okay, next, they say the Web3 online annual spending could reach 12.5 trillion in the next decade. That is a huge, huge number. That is more than the market capitalization of gold. And I think it is very, very, very possible that we see something like this happen. But the interesting thing about this is that if Web3 is really going to reach those numbers, the next few years as things get launched is where we're really going to get the initial data. So this is something that I still consider high risk, Web3 in any way, because it is very, very new on this disruptive technology list. Digital wallets have been around a lot longer, but Web3, I think, is going to be where things go. I just don't really know if I care for the term Web3 because I get it. But here's the thing. I look at these all as different industries. They just all fall within this Web3 bundle. But I really think what you're going to see is that gaming and the metaverse are also going to be kind of blurred, because the metaverse is essentially a virtual world where you can do things that you would otherwise do in the normal world, like, you know, meet with people around the globe. Instead of traveling, you all connect to the metaverse and you meet there. You know, you could go and you could literally have a date. You can meet someone new that lives, you know, half a world away from you and go out and speak to them in an environment that seems more fitting to meeting someone for the first time. So it's very, very interesting. But I think that assuming that all of these things are going to, you know, appreciate to within 12.5 trillion in the next decade, you're putting a value on the entire market, whereas I think a certain portion of this market could grow much more rapidly. And I think that would probably be the gaming world, because you have gamers today that are very intense about what they're doing. They already have revenue streams with Twitch and YouTube and other things like that. And I think you're going to start seeing that it's going to create a lot more revenue streams. And gaming is really going to become big with younger generations, even more so than it is today, because it'll turn into something that at a young age can generate investment revenue. So, you know, I see like virtual worlds, like the metaverse as a contained world, or maybe not self-contained, but you can connect to others, whatever, being something that could actually not grow as fast as online gaming. Online gaming, I think, could see a much faster appreciation in its market capitalization as NFTs and the whole Web3 ecosystem has started to integrate within it. So that could be an area that I look to invest in. It might even tell us why Activision Blizzard was just bought by Microsoft, I believe, right? Didn't they buy it? I think so. If I'm wrong about that, tell me in the comments, but I think they did. You know, think about it. They just bought World of Warcraft. You know, this is the longest running virtual world, or, you know, MMORPG, and with the most users. So what plans do they have for it? I mean, I'll tell you what I would be thinking. Why don't we turn this ecosystem or economy into a blockchain-based NFT ecosystem and start generating transaction fees and things like that to facilitate it? It could be a huge revenue stream on a platform that already exists with relatively small investment based on the amount of return it could bring in. So very interesting. I think that that's probably on their minds, but we'll see how it plays out. Electric vehicles. So they say, based on Wright's Law, ARK forecasts that EV sales will increase roughly eightfold, or at a 53% annual rate, from 4.8 million in 2021 to 40 million units in 2026. The biggest downside risk to our forecast is whether traditional automakers will be able to transition successfully to electric autonomous vehicles. I think that they will be able to transition, but I think it'll take time. It'll take investment. And, you know, I think we will probably share a brunt of that cost. So you may see prices of existing vehicles going up, or electric vehicles going up, so that they can, you know, price in these things. But you got to imagine that someone like Tesla is so far ahead that their costs could actually keep going down. So it's very interesting, once again, to see where EV sales will go, just like everything else on this list. But I think it's very possible that we do see a 50% annual growth rate, because at a certain point in time, you're getting to a point now where the cost of EVs are coming down. And if the cost is coming down, well, then it's going to be easier for people to buy. I think you may just see cost going up for certain traditional vehicles so that those companies can transition if they have the money. I don't know if they'll try to put that cost onto their consumers, but companies have a history of trying to do that. So I don't know how they'll really do it. Maybe they'll sell stock. We'll see. But or maybe they'll have enough free cash flow to start converting. But I do see that as a downside risk. And I don't really necessarily see growth or transition of existing automakers to electric autonomous vehicles as being a downside risk. I see it being more of a risk to slow down the growth rate, right? I don't think it's going to flip it, to a negative. I think it's just going to slow it down. I think it's going to keep growing, but maybe it won't be at 53% if traditional automakers have a really tough time transitioning. So we'll see how that works. Okay, it says here, if traditional automakers navigate the shift from gas-powered vehicles successfully, EV sales could scale 8-fold from 4.8 million to 40 million during the next 5 years. That is an 8x in electric vehicles, meaning that companies that produce what is needed to make batteries and make other components that are part of electric vehicles would appreciate significantly because their goods and services would be much more valuable. So keep in mind, this gives you a lot of areas to consider for investment, and it makes a company like Tesla look very, very beneficial to continued parabolic appreciation over the next 5 to 10 years. Very interesting. Okay, and finally, we just have here a little overview that says the ARK Big Ideas report is a comprehensive research. It's comprehensive research covering 5 innovation platforms: artificial intelligence, robotics, energy storage, DNA sequencing, and blockchain technology. These are the areas that they feel are going to produce the most disruptive innovation. I personally think blockchain technology is going to be a big, big one. And I think Bitcoin is going to be a big, big one. I think DeFi ecosystems are going to be huge. And the ones that have the most transaction volume over the next 5 years are going to be the ones that succeed, and the ones that have the best underlying infrastructure to scale to those transaction volumes are going to be the ones that succeed. So at this point, I look at infrastructure. Okay. And they also list 14 transformative technologies that are approaching tipping points. The author here says, I highly recommend that you take the time to review this important research, and I 100% agree. Once again, this is from the ARK Big Ideas report. All right, this report can be found on the ARK website, and I will have a link in the description for how you can get a copy of it. It's 132 pages and has a ton of info. I would put it on an iPad, something like that, and scroll through it every now and then, read some of the information, absorb some of it. It's going to be very important, in my opinion, to follow these reports every year from ARK, because they are looking at the technologies that could change the entire way we live. And that, in effect, would change where all of our money is going and market capitalization is going, and could pose an incredible opportunity for growth of wealth over the next 5 to 10 years. So keep it all in mind. I hope you found this interesting. We went to about 27 minutes, but I think we went over everything in quite a lot of detail. If you have any questions, please throw them in the comments. Make sure you follow me on Twitter. Make sure you like, make sure you subscribe, and make sure you check out this report. Check out the ZDNet article. I'm going to have links for everything in the description. I'll catch you guys next time. Peace out.